we launched something called Silicon Badia roughly a year and 8 months ago. Well, the idea we had from the beginning was to really build a sustainable and successful startup ecosystem, including venture capital, because venture capital and angel investors are a big part of the startup ecosystem. They're a big support to the entrepreneurs. From the beginning, we decided we need to be actively present in the US, because if you look at startups with technology or innovation, the US is still the leader in the world. It might not be the biggest market opportunity because emerging markets are growing, but in terms of funds or funding available or maturity of the ecosystem, is there. فقررنا من الأول إنه we need to be active there. So we launched a fund, seed stage fund, targeting US startups. Over the last year or so, we've done 13 investments. Coupled with that, we've also launched something called the Launchpad program. Well, Launchpad program is us, sorry, also in the US, where we're taking local Middle Eastern companies. We've taken 4 Jordanian companies. We take them to the US and we accelerate them there. So it's a 3-month program. They get some funding, we take some equity, we take them to the US. We really try to make sure they're integrated into the ecosystem there, whether it's for help with product, pricing strategy, business development, meeting investors, etc., etc. Well, it's proven to work so far. So two of the first companies we took, Duckwalk. We took a company called Duckwalk, which is in the web translation and localization space. Right now, they're being incubated at 500 startups. We took them to the US a year and a half ago. Mixed Dimensions in the middleware space, is at the Alchemist program in Silicon Valley as well. The final piece to layer over that is a gap that you see in the region, which is Series A funding, for startups. فهلا we're about to launch and announce a new fund targeting Jordan primarily, with an ability to invest in surrounding areas, Lebanon, Egypt, Morocco, Algeria, Tunisia, not the Gulf. Levant, North Africa, doesn't mean companies need to start there and be there forever. Companies need to have, it's an impact fund, and we're launching it with impact LPs. We're targeting $25 to $30 million. We're about to launch the first portion of it in the next couple of months and start investing.
Do you have a target for the number of startups you invest in over maybe
Yeah.
the first 2 years? What type of companies?
Sure. So with this fund, we're looking to invest into roughly 15 anchor investments. So investments we're putting up to $2 to $3 million into. And we're hoping to take 10 to 15 launchpad companies. So companies that, we're giving a smaller amount of capital to 25 to 50K, taking them to the US. If they do well, we're putting more money into. That's for the Middle Eastern fund. Our US fund, we're hoping in the next 2 or 3 years to invest into 35 companies there. So you're talking across the boat, because we see them working together, right? And it's starting to happen. Our US companies become immediate points of contact and references for our Jordanian companies. So they immediately have 30 or 35 friends when they arrive in the US who are the same stage, who have raised funding in the US, and who know how to play the game over there. So we're talking 70 or so.
The type of startups, in the sense that the product they offer might somehow complement previous startups that you're incubating.
Yeah. We don't put too much of emphasis on that, but it's starting to happen naturally, right? I mean, the fit doesn't have to be one-to-one, whereby, one of our health tech companies in the US just figured out how to do their SaaS pricing model, and one of our, translation companies in Jordan is trying to figure that out. So, why don't we connect them and benefit from lessons learned? One of our edtech companies in San Francisco is now talking with one of the leading educational technology companies in Jordan for a partnership for Jordan. One of our pharma tech companies in the US is talking to one of the pharma companies in Jordan for a partnership. So it's starting to happen, and we think it's going to start happening more in terms of collaboration between both sides.
And when you launch the fund, how will startups be able to apply to that?
We have a website. It's decent. I think we need a better website, but everyone needs a better website. So far, we've relied mostly on referrals. So we like to, we mentor at most of the accelerators in town, and in Egypt, Plastics Labs. We're connected with all of the investors, MEV, PE, and WAMDA, and all the, so STC Ventures. So we rely on our network to source companies mostly. Doesn't mean they can't send me an email or add me on LinkedIn, and I'm always responsive. And I started venture in the US prior to Silicon Badia in 4 or 5 years ago. And the nice thing is I'm 2 months there, 2 months here, so I get to see what's happening in both ecosystems and compare them. هناك, obviously it's much more mature, and startups now are hot again. I mean, and when I say hot, if you look at the amount of seed stage deals that are happening, we've seen an uptick in the last few years. If you look at the valuations that companies are commanding over there, it's also on the uptake. But there's a strong realization in the US after some of the B2C or consumer-focused companies like Groupon and Zynga went public and didn't perform as expected, and even Foursquare as a non-public but still underperforming company. Companies like Color that raised, I think it was $40 or $50 million in funding and shut down, or were acquired by Apple for a fire sale. Investors, particularly Series A investors in the US, are starting to focus more on enterprise, B2B, and if it's a consumer play, it has to be a drastic. Like, we're not looking at 1 million uniques that's going to get me jump off my seat, right? Show me 10 million uniques. Show me engagement. So we're not only looking at vanity metrics, we're looking at real engagement. So that's in the US. Here in the region, I think over the last 3 to 4 years, the activity picked up, and I'm sure you'd agree. There's a hype and excitement that was built in the last 3 or 4 years around the startup communities, whether it's in Jordan, in Lebanon, and hopefully in Dubai and some in Egypt. Question is, are the fundamentals strong? And to be honest, from what I'm seeing now that we're 4 years in, and particularly if you look at Jordan, people are starting to realize, and when I say people, it's both the entrepreneurs, their families, their staff, and investors are starting to realize it's super hard. I mean, مش بيوم وليلة you're gonna wake up and build a...
build the service بيوم وليلة, but
Exactly. You might not be successful. You might not be able to monetize. How are you going to pay salaries? How are you going to grow? What happens if one of your biggest customers closes down? What happens if you run out of money? عرفت كيف؟ I think there was an overhype, an overexcitement on everyone's part, and I think هلا we're going to start. I don't want to say it's a bubble because it's not a pricing bubble, it's an excitement bubble. I think it's starting to pop a little bit, and I think we're going to revert back to the normal, which I think is good. It's not bad. The higher quality and persistent will continue on, and will form a survival of the fittest. It's evolution. The next breed is going to be stronger than the one that came before.
Okay, so I'd like to end this with if you could share maybe some tips for entrepreneurs.
Right. Sure. One, follow the lean startup methodology. Right. Get out of the office. Everyone has great ideas. I'm sure you have great ideas. I have. Yeah, exactly. Well, let's talk about after. Everyone has great ideas, right? I have great ideas. I think of 10 every day in the shower. But the key is execution, right? So until testing and execution, fail fast, right? If you have an idea, come up with a minimum viable product, an MVP, or an alpha or beta version. Test it out, and put your theories or hypotheses to test before you raise money or go from investors or externally. It's fine to raise money internally or from your family and friends, but really try to test yourself and test your hypotheses, and don't lie to yourself. If you see things aren't going well, don't lie to yourself that they will go better. Move on, fail fast, go to another idea. That's one of the first. Two, make sure you select the right team and that you have a solid co-founder. It's much more easier, not much more easier, but I found that with my companies, having a co-founder or co-founders, not too many, because then it becomes too many cooks in the kitchen type of thing, there with you, because it's hard. Start a company is hard. To make it successful is even harder. and you know, long nights, late nights, salary cuts, explaining to your wife or husband that why you can't, you know, pay rent this month. Really, you need someone to be there alongside you. 3 is really learn how investment and investors work before you approach investors. You know, I have found it with a lot of our companies that they can continuously expect investors to. There are some investors that are value-add investors and others that aren't. Realize that and realize what they can help you with. Don't expect them to do everything for you, one, and don't expect them to continue to fund you, because that's not if you're doing poorly, that's not our job. At the end of the day, you have to understand, particularly funds, less of angels. We invest other people's money, so we have a fiduciary responsibility to invest wisely and make a return. So if your company isn't doing well, just because I have some money in there, and you haven't proven an ability to execute, doesn't mean that I'm gonna continue to fund it. So really understand the economics from the investor's side, and put yourself in our shoes before you go out and